Homeowners stung with another rate rise. We reveal the mining stock that rocketed today. And which streaming service is jacking up prices? Trading Up, a collaboration by The West Australian and Grapher. First up, and it's the news nobody wanted to hear. The suits at the RBA have raised interest rates again today, up another 0.25% to 3.85%. That's the 11th rate rise since May last year. House prices are rising again, which may be one of the reasons behind the hike. That tends to make the RBA nervous because most of us tend to spend more when our property value increases. Spending more fuels inflation, which is still high at about 7%. Qantas announced a new CEO today, and for the first time ever, it's a woman. Current CFO Vanessa Hudson will take the reins at the Flying Kangaroo in November when current CEO Alan Joyce steps down. Patience certainly paid off for Hudson, who has been with Qantas for nearly 30 years. She's been working closely with Joyce for more than a decade. It means that for the first time, Qantas and its major rival Virgin are run by women. Alan Joyce came to Australia from Ireland to work on the now defunct Ansett. He was CEO of budget carrier Jetstar before moving to Qantas. He says he's now looking for a new job, hopefully somewhere in Sydney. Shares in lithium producer Liontown were paused briefly today on speculation of another potential bidder for the WA-based miner. Liontown chair Tim Goyder has already knocked back a takeover bid from US giant Albemarle in March. But Liontown is hosing down the rumours, with Goyder playing his cards close to his chest, denying the speculation. Shares were trading again by the end of the day, up 0.74%. Staying on lithium, and Wesfarmers CEO Rob Scott today announced the group would target further investment in the mineral as part of its growth strategy. The WA giant already part owns the Mount Holland lithium project in its home state and may be set to invest further. Still to come, the fintech company investors are going crazy about, and the streaming service that's set to charge Aussies more. Stay tuned. Back onto the markets, and Grapher's dark horse of the day is SmartPay Holdings. Shares of the Kiwi-based EFTPOS business have surged over 30% over the past month. Why? It's a fintech generating revenue, not burning it. Ka-ching. And now to that streaming service that's about to charge us more, Amazon Prime. The streamer, owned by billionaire Jeff Bezos, is slugging Aussies with a 40% increase on subscription fees from next month. Amazon Prime owns the rights to new Lord of the Rings spin-off, The Rings of Power, which debuted in September. But you'll now need to fork out Australian $9.99 a month to watch the latest Hobbit happenings. Still, it's cheaper than Netflix. And finally, that mining stock story you've been waiting for. Shares in Coolabah Metals went crazy today, climbing a massive 30% on acquisition news. The WA miner announced it would buy 2 Canadian lithium projects today. The lithium market is red hot. You can find more business news content on thewest.com.au. Or to see all the data and insights behind this video, check out grapher.com. Thanks for joining me on this special episode of Trading Up. I'm Sarah Hughan. See you next time.